Have we just witnessed Wall Street make a very sneaky move? In today's video, we talk about the dark pool liquidity that just happened over the last 24 hours, Apple and Amazon's results and why those may not look so good for the future, and why, of course, we are seeing massive transactions at this level. We've hit supply, we know the bonds market has started to freak out a little bit, and even with China news, could we be still heading for a sell-off very soon? Join us today as we cover stocks, commodities, and cryptos in more detail. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss, including the latest macro, data, and key levels. As you guys know, over the last 24 hours, we suspected we may see a catalyst. Apple and Amazon earnings were pretty good until we saw the forward guidance. And as you'll see in today's video, it turns out that really they're a little bit concerned about the future. But let's look at the good news before we look at some of the bad and the big options flow. And the good news is that the S&P 500 has now recovered over 50% of its drop. Yes, we're back to where Liberation Day kind of began, and we're back on that 1998 narrative that we've discussed before, where markets would drop, recover, and then drop without making necessarily a new low afterwards. Now, it is very uncommon that a market will recover 50% of its drop and then actually not make it an all-time high. In fact, only time that didn't happen was 2022 when we go back into the 50s. We also know that sentiment reports are continuing to show a wall of worry. So what makes these unique? Well, not only have we seen 50% of respondents plus over the last 10 weeks of sessions become bearish, but they're not doing what they're saying. That is that retail traders and sophisticated investors claim that they're scared of markets. But as it turns out, according to the latest reports here from JP Morgan, they're just not doing that. We seem to be buying big time. Retail net imbalance in April sets another record. All-time highs in terms of overall flows, $40 billion of net inflows, and this has topped the March number, hitting the biggest inflow ever, particularly in exchange-traded funds. Could they be using 3 times exchange-traded funds? That becomes the next question. So this is where things get even stranger. Remember, on this channel, we do track dark pool liquidity. We look for where Wall Street is placing its largest positions. And we had a suspicion that there might be some large trades coming in right at these highs. Now, before the China news dropped, and still that is out on verdict to really see what that even is going to do, we actually found that near the highs of the day, a big dark pool transaction came through on a 2 times leveraged ETF for the triple or for the Qs. We also found a triple Q one, which you'll see in a moment. Now, what is a dark pool, you might ask? A lot of people don't know. It's a transaction done between 2 large entities that's generally off market and reported at the end of the day. These tend to be massive transactions. So, of course, they're done between, let's say, more astute or more potentially in the know style people. And they tend to be large and they tend to be, at important points. If you notice here, oftentimes we see them before large sells and before large buys. So a huge one here for the 2 times Qs, we can see right near the highs. And we can also see that we've had a few large transactions recently, including a massive one coming in from IVV, which is the S&P 500. So could this be markets reacting to this supply zone or technical resistance? It certainly could be. But we also saw a huge one coming through as well on the TQQs. Now, again, near the highs, right where you'd suspect there was some form of supply or resistance in terms of technical charts. Is this a coincidence? It could be. Could it still be wrecked? Absolutely. But you've got to remember, look at where the large transactions have been more recently and then see the reactions that have happened over the next coming sessions. It doesn't have to happen straight away, but it certainly is interesting that it's happening right on these levels. Just to show you as well, recently we've been talking about that sweep level and how that was leading us most likely to this key point, which is 5,600 to 5,660, as you'll see in the options flow on the S&P 500. What a key point for us to be at. And we've also seen a couple of other large transactions. I thought I'd mention Bitcoin in particular, getting a lot of big transactions coming through the BTC Grayscale, Bitcoin Mini Trust. They're all coming in this combined area. Now, a lot of you may think that's a sell. It could also be a consolidation buy because remember, the markets are dull. That is, the markets are coming up very slowly, methodically moving up through, and sometimes this can be an accumulation at those zones. So you need to remember that. So this is where the data comes in. Are we due for a sell now that we've entered into the danger zone? The market's been on all intensive purposes pretty much a miracle run back up to these levels where Liberation Day all began. And of course, we now know that we went up 7 days in a row. Now, notoriously, 1 week after we've seen runs like this, we have a little bit of cooling off to do. Only 31% of the time, according to Subu Trade, are markets still bullish after that event. And this is one of the things that, of course, could also lead in, along with options in a moment, to potentially starting to see a little bit of a cooling effect as we grapple with this key level, where no doubt some people will sell off. Why? Because it was where Liberation Day was. Now let's take a look at the Zweig breadth thrust. Now, by now, most of us have probably heard about this. If you're not familiar, Zweig breadth thrusts tend to be one of the most bullish, best buy signals for the next 12 months that we've ever seen. Now, since the 1950s, they've had a 100% track record when it comes to the next 12 months. But as you guys like to see, we went back even further and we found that when you were going into the 1930s, there were a lot of false reads back then. Now, that was because of the volatility of the market. Funnily enough, the only other time we've had tariffs really like we have right now was during this period of time. And most people know this was an absolutely wild time in markets that was, diabolical when you talk about this sell-off that actually occurred. So I just want to point out, while Zweig breadth thrusts are one of the biggest bullish reads, they can fail. They have failed before. And I think it's important to note once you get all of the information together. So where are we right now in terms of the 98 narrative? Well, we're at the scene of the crime, I guess. We're back to where we were ahead of all of this selling that went through. Funnily enough, what ended up happening after this in 98 was we dropped and then we rallied back forward. So could it be that we're in a similar circumstance? This obviously looks exactly the same. We're literally at the exact same levels. Is it a coincidence? Hey, it's pretty wild when you look at it. CTAs, we've talked about CTAs being buyers throughout April and buyers throughout May. According to the latest Goldman Sachs data, basically momentum funds are still buying in these markets. But let's take a quick look here at the earnings reports, both Apple and Amazon. Now, on the surface of it, Apple's report was pretty good. Services, which is not going to be impacted that much, that was up 12%. That's pretty good. Products up 3%, whatever. Revenue 5% and operating margin 31%. EPS beat by 0.03% at 165. So was Apple pretty good? It's okay. Future guidance, though, that's where the problem was. They didn't really want to talk about it. They're like, yeah, we'll see, whatever. Markets hate uncertainty. It wasn't really that clear what was going to happen next. And of course, the markets then sold it off around 3% in after hours trade before the China news came out. Amazon was something similar. Revenue up 9%. Amazon Web Services, revenue up 17%, which is very, very nice. Not too bad there. And in general, an EPS beat by a little bit in terms of guidance, 23-cent beat at 159. So is this good? Again, yes, very good. But unfortunately, the future guidance was a little bit less clear. And of course, that is one of the problems when it comes to Amazon and Apple. It's a little bit different to the Microsoft situation or the Meta situation indeed. Now let's have a look here at just a couple of alt assets. Then we'll go through the central bank liquidity, options flow, and the key levels we need to be watching. Gold, silver, still looking like silver is priced much better than gold. Obviously, gold hit a key support over the last 24 hours we'll talk about soon, or demand level. And yes, actually, this level has held up relatively well for silver. Silver is pretty underpriced when you compare it to gold. Speaking of which, when we see gold do what we thought it was going to do the other day, which is come off an incredibly big spike high, and everybody, probably didn't see it coming except for most of us, we know that when we see similar results like this, usually Bitcoin has started a pretty good run. And since then, it's actually done very nicely, up some decent percentages. Could we be seeing more from Bitcoin? Time will tell. We'll certainly be watching that. Another thing I thought I'd just note here and bring up considerably, or quite a lot this year in 2025 and 26, is going to be this CAPEX stuff. Corporate plans in the future. If they continue to see this dive, that's a really bad sign for the US economy long term. And I think you need to keep this in mind, especially when you're looking at the way that market structure has been over the last couple of months. And we will be tracking that along with this one here, which is central bank liquidity. And central bank liquidity was not exactly going up over the last couple of sessions. As markets have rallied, central bank support for the markets actually has dropped off. It's a little bit of a worrying sign. So we'll be tracking that fairly closely. And as you can see here, the S&P 500 basically filled the gap and then started to sell through the session. Now we have a gap here, we have a gap here, and we have a gap here at 51.53. So it would make sense that maybe the market would want to sell and potentially get back down to that zone. Is it possible, though, that markets could still make a new high, then dump down? Absolutely. And you've got to look for the signs. So the first sign that we've got is dark pool liquidity and anchored VWAP here. Both got hit and both got respected over the last 24 hours. Non-farm payrolls, the jobs numbers is about to come. That could be a very important one as well. And because we now know where the high of the day was, if we take this and we're ejected again, that would form a tweezer pattern, which of course, if we then make a new low, would generally be seen as a very big negative. Now, the other thing that's worthwhile noting is that we hit the weekly 20 moving average. And this is a huge one because as you can see here, guys, on the way up, we respected this 20 moving average a lot. This is one of my favorite reads, one of the most well-known reads in Wall Street. And obviously it has happened right there with that little bit of a rejection. So next 24 hours in particular will be important for this chart. And we'll be watching very closely to see whether Wall Street has shown its hand with those dark pools. Now, another reason why we had a suspicion that maybe we'd hit 56.60, maybe we'd find some resistance around this point, had to do with options. Options strikes at 56.50, 56.60 continue to heat up. And you can see here that there are a lot more calls now at these higher 5,600 numbers. So if we do keep running, it could create what we call a positive gamma and a squeeze style effect. But maybe Wall Street is going to want to keep the market underneath these zones. So it's important to note for the first time really in weeks and weeks and weeks and weeks and weeks, puts have started to disappear and relatively speaking have become cheaper. So is it now cheaper to buy puts? Yes, but why is that? Because so many people have been buying puts this whole way up through the wall of worry and unfortunately been losing on those positions. And it makes sense when we look at a lot of other stocks. Tesla here, you can see 300, 290, 300 keeps coming up. If we go past 300, positive gamma, squeeze event. If we go and have a look at something like Nvidia, the same thing, 115, 115, 115. We went up close to it, rejected it as you'll see in a moment. And again, a positive gamma event. So this is going to be a very important resistance area should we be able to break through it. Now let's take a look at the leads. Yields were actually up over the last 24 hours and we saw the 30-year, 20-year, etc. all start to jump a little bit. Something to keep an eye on, not too worrying there. We also saw one of my favorite reads, which is my bond indicator here, start to show signs of significant weakness. Now, what this is telling me and telling us, therefore, is that this could be a false narrative where we are right now. Now, it's not necessarily a guarantee, nothing is, but it is certainly a piece of evidence saying there are a couple of shaky things going on here as we approach and hit the massive key supply zone. So it'll be interesting to see whether the market reacts negatively to the non-farm payrolls or any of this news that's coming out. Remember, this is still a news-driven market, so it can bust some of these indicators. You've got to always take the best type of risk management whenever you're looking at it. Now, we also saw things such as high yield spreads start to spike back up, which is telling you that even though the markets are all like, oh, everything's fantastic, the bonds market underneath is saying, well, wait a second, something doesn't look so good. And this again could create a totally different narrative over the next 24 hours. The dollar is in an inverse head and shoulders at this point. Could it be that the dollar is going to try to start breaking out towards the upside? Certainly that seems like it's on the chart, but again, you've got to be a little bit careful. It's a pretty clear head and shoulders or inverse head and shoulders. So a lot of people are going to be looking at that. And that does need to be taken into consideration. It's also interesting, though, that everyone was writing about how the dollar was dead and everything was over. And then as soon as that hits crescendo, the dollar starts to find buyers once again. Just remember, if it's in the press, it's often in the price. Now let's go over here to gold. Gold hits key demand. It hits that first level that we expect buyers. And if you don't think technical analysis is good, well, look at this. It does find a level and it finds some form of support buying. And of course, we've talked about this 3,200, 3,220. If you bought there, well, I guess you're up a few bucks an ounce, so that's not too bad. But look, gold was always set to do something like this. I'd like to think that we're one of the premier channels on the internet in terms of our calls on gold and talks about gold throughout the last couple of years. And obviously, just recently, we turned a little bit sour on it near that 3,500 because of the exuberance in gold. Now it's come down though. A couple of little things have happened here. A little turn towards the upside over the last 24 hours, a little bit of stabilization at this level. That's good to see. Silver gold ratio, you can see silver is holding very nicely to gold. And when you actually have a look at silver's last 24 hours, oh, they play us sneaky, these Wall Street boffins. What do? They come and they wipe those lows and then they start rallying it up. Looking specifically at 3280 here to potentially be a very good bull sign coming into the end of the week. I'd actually like to see that. Let's see if we can get above here and finally start some consolidation. If this starts to run here though and starts to move up to a new high, I'd say it's going to make a new high, bust out that 3450 finally, and start to actually move forward. Because silver is undervalued to gold right now in terms of the precious metals. When we take a look at copper, it also hit a key correlation zone of support. When we take a look at oil, yeah, it's on support, but geez, I tell you what, this is a very risky trade and play. But yes, it is technically on support at this point. And then we have a look at Tesla, which is coiling near the highs. Obviously, very keen to see the next big move here from Tesla and how that's going to look. So we'll be watching that one very closely. And semiconductors correlated to the trend line. So we didn't break out. We haven't actually seen one of the most important charts, which is semiconductors strengthening against the SPY, actually coming through. So we're at that kind of resistance area, as you can see here. Nvidia, same thing. Most traded zone 115, correlation, another resistance. Middle East, China actually rallying up. China's looking like it wants to get that gap fill going towards 22,850. So that looks actually quite bullish on the charts. But then we go over to the US 2K. It hits 2K, resistance, correlation, exactly what we suspected it would do as we hit these S&P 500 levels. And the NASDAQ resistance and the weekly 20 moving average. So again, a very critical point here on markets and exactly where you'd expect the correlation to occur. Now, one thing that's looking a little bit better than the others is got to be Bitcoin. Bitcoin continues to rally slightly higher each time, making a higher high over the last 24 hours. A lot of people getting hyped on the crypto world, but non-farm payrolls is ultimately going to be the decider of a lot of risk on assets. And remember, we're still in the danger zone for Bitcoin. So while I think it's bullish still, do we know that it's going to move towards the next 106 or anything? Not yet, but still impressive stuff. 97,000 almost here for Bitcoin at the time of this recording. Now, when we scroll down, you can see jobs numbers are coming, non-farm payrolls 1 hour before the market opens. This number will move markets this time around. So make sure to stay tuned for that. And it could also be used as a catalyst to make an excuse for maybe what Wall Street's been doing over the last 24 hours. Guys, what a big couple of weeks we've had. What a huge 3 months we've had, really. It's been through the ringer in terms of the ways that I'm sure all of us have felt emotions, from huge sells and fear to buy-ups and potentially euphoric FOMO rally right now. We are at one of those important zones. And you don't always find these areas, but when you do, boy, oh boy, does it get interesting finding out what Wall Street might be up to. Thanks so much for watching. I hope you have a great day. And just remember to always place risk management in situations such as this. You might stack all the odds in your favor, but that doesn't necessarily mean that you're always going to be correct. We're in the game of making educated choices. Thanks so much, and we'll see you for now. Bye, guys.